Hello, my name is Charley Martinez. I'm with you. I'm the Farmer Financial Management Specialist with UT Extension. And in recent light of events that have happened across Europe, we've been getting a lot of questions from producers as to what does it mean for producers in our state as well in the region and in the country. And so we thought we would get together, make this video, and I'm joined by Dr. Andrew Muhammad and Dr. Aaron Smith, they're both with UT Extension. And so I'll kind of just kick it off and then let either one of y'all go first. In light of what's happened, what does that mean for our markets immediately or in the short run?
Well, I can kick it off on the marketing side, I guess, and then turn it over to Andrew on the trade. The biggest thing is volatility, right? I mean, we've seen some crazy price reactions yesterday and today, and a build up as we've seen this kind of escalate over the last 2 weeks. But you look at wheat and corn; those are ones that there's potentially going to be some ramifications directly with the Ukraine conflict, just because they are strong exporters. Ukraine accounts for about 16% of corn exports, and then if we look at Russia and Ukraine for wheat, it's closer to 29% of global exports. So that's going to continue to throw some volatility into the market. The other one that the global economy does not like is unpredictability and instability, and I think that's showed up. There's also a tremendous amount of uncertainty on demand, particularly as it relates to China and what their potential reaction to this might end up being. And so we did see soybeans yesterday with $1.10 trading range, which is tremendous. It's a huge amount of variation, and we expect that to continue because this situation is very fluid.
Yeah, I think Aaron sort of hit the main point, and it's the fact that Russia and Ukraine are major suppliers of particularly corn and wheat and grains to the world. And that's much more important than sort of our direct trade relations with the Russian economy, and for that matter, Ukraine. And so even about 10 years ago, we exported only about $1 billion of agricultural exports to Russia. And that's a sense of decline to less than 300 million. And so if you think about a range of maybe, 100 important countries, Russia ranks about 150th, right? So in terms of US agricultural export sales to the world, I'm not really seeing anything there that seems to rise up as concern. But I think what's particularly concerning is the fact that we do import almost about $1 billion in fertilizer from Russia. And obviously that's nowhere comparable to what we import from Canada. But the point is, clearly with tight fertilizer markets and prices already significantly higher than in just sort of last year and years past, one could imagine that this could make fertilizer prices increase even more, so having a significant impact on production costs moving forward.
So, and I guess moving from that, from a short run perspective, could y'all comment on a long run perspective? If this was to, if the conflict was to last, 6-7 months, although we've talked about fertilizer and stuff of that nature, what can producers expect if that was to continue?
Well, I mean, again, there's this highly uncertain set of circumstances, but if you think of things from a broader global economy standpoint, obviously we've seen the US dollar strengthen tremendously as a result of this. Does that stick around? That's going to be contingent on how this plays out over time. When we think about energy, I think that's one that is a huge issue, and it should be something that is a bipartisan issue in the U.S. is addressing our energy policy and energy independence. And I would obviously pass that along to Europe too. I think that is something that could come from this, because we could see tremendous impact in energy markets globally because of this. And then we were talking earlier, a lot of it's going to depend on how this proceeds and what is the methods of how this conflict occurs. I know one that's been a hot topic the last couple of years in agriculture is cyber attacks. But you'd have to end up seeing what are some of the potential outcomes. The challenge right now is we just don't have great information. So a lot of this is just hypothetical, or we don't have good enough data to really make a decision. but there is a lot of uncertainty that's potential consequence of this for sure.
Yeah, and I'll add, I tend not to like to sort of make long-term projections because you just don't know. But I guess one of the things is if you think about sort of what took place when Russia annexed Crimea, they still managed to figure out how to sort of keep natural gas flowing to the European market, right? And so it really does speak to how much we just don't know yet how this conflict is going to impact trade flows, both in terms of resources, inputs, and agricultural exports. And then I think one thing in the long term, at least in the geopolitical sense, is how does all this relate to, say, another superpower that sort of sees itself as having access to, say, Taiwan in the South China Sea? And like, are we really sort of looking at something geopolitically to where competing superpowers are trying to sort of annex sort of parts of the world? And does it really sort of put us in a position as a country to have to challenge these countries in these particular actions? And that's what's concerning probably in the long run, I think.
So then, given that, we do have uncertainty, I think that lends itself to risk management in the immediate future for our producers as well. Can y'all both speak to, in terms of, would you recommend producers locking in prices if they're there on the market, Aaron? Or, what can they do from a management standpoint that would benefit them?
I'll speak more on the grains and oilseed side, but we've had a tremendous run up in prices over the last couple of months. And, we do have some very profitable opportunities. Now, I think you do have to be careful in fixing final prices. I am a proponent of laying off that risk by selling, maybe a quarter to a third of the crop at some of these levels. But I think we do need to really think about how we use our risk management tools. Crop insurance, we're going to have some pretty good crop insurance price guarantees that will be finalized on Monday, but that'll provide us a very good safety net. And then I think using strategies that protect against the downside while allowing to take advantage of potential upside movements is a great method to end up using. The prime example of that is using option strategies, where you're eliminating some of that downside risk, but it allows you to participate in upside movements in these markets, because this volatility is not going to go away. And there still is some underlying bullish support for grain and oil seeds in terms of prices. So, the big one is just making sure that you're identifying that downside risk, trying to mitigate it, get some sales on the books, because we are under a set of circumstances where our production costs are going to be very high. So it's just balancing those risks and making sure that you're aware of the position that you're in and reevaluating that on a continual basis, because this is a super fluid situation and we could have something change in the next 5 minutes that would potentially change, the direction of these markets. So, just making sure that risk management tools are fully explored and your operational risks are somewhat mitigated.
I appreciate both of y'all joining me this morning. Hopefully it was something beneficial for you as the viewer watching this video. If you have any questions, please reach out. Our information will be on the ending slide. Thank you.